The widely anticipated collapse of China Evergrande Group has everyone wondering what the potential fallout will be. Will it lead to a global financial crisis, or will the Chinese government step in and take control of the situation and limit any fallout? In today's video, we're going to look at the potential effects this could have on the U.S. real estate market specifically, and what the warning signs would be to look for trouble ahead. Let's get into it. The China Evergrande Group is one of the largest property developers in China and the most indebted property developer in the world. If you're watching this video, I'm sure you've heard something about them in the news recently. To make a long story short, they're in a bit of trouble. They have debt they can't make payments on because they're running out of cash. This isn't a huge surprise that came out of nowhere though. The company themselves warned that they might default on their debt almost a month ago. They've been scrambling to find a solution to their problems, as the Chinese government has indicated that no bailout is coming. And they've even instructed local governments in the country to prepare for the fallout. Evergrande has recently stated they've brought in financial advisors to help navigate through the situation. Now, there's something I think we need to point out here. They racked up more debt than some countries' entire GDP, and they're just now bringing in financial advisors? That probably should have been done in the first place. I just hope they didn't hire anyone from PricewaterhouseCoopers in Hong Kong. These guys might have some trouble getting anyone to take their assessment seriously in the future after giving Evergrande a clean bill of financial health in a report released this last spring. Regardless, they're in trouble. They managed to sort out a debt payment denominated in yuan, the Chinese currency, which helped them with their domestic situation. But when it comes to debt denominated in US dollars, they don't seem as eager to pay up, and they aren't even saying whether they will or not, leaving the world to wonder what's coming next. Right now, they still have a 30-day grace period on the non-payment from this last Thursday before it's officially in default. But more debt payments are coming due next week and in the months to come. If Evergrande defaults on their debt, then the banks and suppliers they owe will not get the money they need, which in turn could result in more defaults if those banks and suppliers can't pay the companies they might owe money to. This could lead to more companies collapsing, and all of it resulting in a rise in unemployment and a drop in aggregate demand in the economy, otherwise known as a recession. And this could spill over into the global economy given how interconnected the financial world is in our current day. Honestly, no one knows how this will play out. Now, Europe thinks they have limited exposure, and when asked, European Central Bank President Christine Lagarde didn't elaborate on just what that meant, and emphasized they'll be looking at the data as it comes in and take it from there. Here on the Real Estate Watch channel, we look at the data too, and we are specifically focused on the U.S. real estate market. Right now, we're considering the ways this could impact U.S. housing. Now, if there are liquidity problems in China from the fallout of an Evergrande default, then Chinese individuals and institutions that own U.S. housing assets could look to sell their holdings to boost their own cash position. Currently, the U.S. housing market is hitting a bit of a soft patch after more than a year of explosive home price growth. So any home sales to boost liquidity may be at the lower end of what properties may ordinarily list in order to move the properties fast. This would then put downward pressure on prices of other homes coming on the market and could lead to price reductions in homes already on the market that aren't selling as fast. But the big question is, how much of a risk is this? One way to measure that is to look at what kind of exposure the U.S. real estate market has to Chinese ownership. For that, we can look at a recent report by the National Association of Realtors on international transactions in U.S. residential real estate. They found that in 2021, Chinese buyers made up 6% of foreign buyers with purchases totaling $4.5 billion. This was a small fraction of the estimated $5.8 trillion of existing home sales from April 2020 to March 2021. Foreign purchases have generally been in decline since the peak in 2017, as the appetite for U.S. real estate has softened as prices have continued to climb, among other reasons. Nevertheless, over the last 10 years, Chinese buyers have made nearly $200 billion worth of residential real estate purchases in the U.S., according to the National Association of Realtors. In terms of units, there has been just over 300,000 existing homes purchased by Chinese buyers over the last 10 years. In contrast, U.S. home sales have averaged around 500,000 per month over the last year. So while the total number of homes potentially in the hands of Chinese buyers is not large relative to the overall housing market, there are enough that even if 1/3 of them were unloaded onto the U.S. market at low prices in a short period of time, we could see some serious problems in U.S. real estate. The next question is, how might we see this coming? From the National Association of Realtors report, we see that the lion's share of Chinese buyer activity has been in California over the last year, and this has likely been the case over the last decade as well. Local markets in the large metropolitan areas of Los Angeles and the San Francisco Bay Area could be the canary in the coal mine in this scenario, and we'll be watching them closely as everything unfolds. Make sure you're subscribed to this channel and hit that notification bell down below so you won't miss our next video on the topic. And if you found this episode useful, please give the video a thumbs up to support the channel. If you're watching this on our Real Estate Watch channel, don't forget to check out our main channel, PapayaCast, where we cover much more of the overall economy than we do here. Thanks for stopping by, and I'll see you in the next video.